Hey traders, this is Luke Myers. Wanted to do a quick summary on this week's trading activity in the ESE Mini. We had an excellent week. Lots of market activity, lots of volume. Briefly, I wanted to kind of go over my trading system. I wanted to discuss a little bit about price action trading as well as the use of indicators. So I use both in my trading. I analyze the price and I also use indicators. So I have two main swing trading systems that I use when I day trade. I have one primary one, which is this one here. This is today's activity for Friday. And this is my primary system. This channel, these three lines here are a 50 period moving average channel, and this red line is a 200 period moving average. I'm gonna briefly go over why I have this on here. So if you look at today's activity, here is 6:30. I'm gonna go back a little bit. So when we go back in the pre-market, you can see that there was this downtrend here. I'm going to draw this line. So for price to signal an uptrend as defined by price action, you would need to break higher than the prior swing high for a downtrend. That would be this area here. You can see that price moved up, the moving average moved up, but price did not break this area. Now if somebody did not know this information, they're going to see this moving average turning up and they're going to say, okay, let's go long. They're going to go long and they're going to get stopped out. And they're going to be like, oh, you know, what happened there? But if somebody who knows price action will be able to look at this and they're not even going to want to enter because it's still in a downtrend. You can see it chopped around for a little bit. Eventually it cracked. Now what it did was price made a new fresh low. That signals confirmation of the downtrend. And you can see I do use the MACD for momentum. That's how I filter for high probability trades. So what we do is to do that, we look for a fresh new low. We want to see that the momentum indicator also made a fresh new low, which it did. You can see here it made a lower low than back here. That's indicating strength to the downside. That's a high probability trade, so you want to go short. So we go short into my area, and that would have been a winner. You can see there was a divergence. That's telling us price is going to go up. Sure enough, it eventually does break up. You can see here we had price broke down, hit and swung, and then chopped around and eventually breaking out. Would have took this first swing here. Now some of the confusion with price action is, well, this was a swing, why didn't you take it from this point? And typically what I do is I go off of the last, for a downtrend, the last swing high, and then for an uptrend, the last swing low. That's how I usually define. That's why I would go with this one here. But you could say that this was a more proper swing because this was the lowest point of the move. The official definition would be you take from the lowest point of the move and you move back. So by the most conservative price action rule, this would be the lowest point, this would have been the prior swing. So really you should have seen a move above here. Now I didn't consider that because I saw this divergence coming and the break was so clean. Anyway, we do get some lower momentum here as it does kind of fight through this support. Eventually does kind of break out. It bounces, you can see it bounced off this support area here. Broke higher. We get a confirmation with momentum breaking out higher here. And we get another high probability trade entry. By that time I was done trading for the day. This is Friday. You can see that what happened was we got a fake out here. It broke the prior swing low, indicating a short. That would have failed. And then it breaks high for another high probability winning trade. So overall, this, if you would have taken all of these signals, you would have had 4 winners, 1 loser for an 80% win ratio on the day. Now let me go over a different chart. Same number of ticks, same time frame. The only thing is now we're focusing a little bit more on indicators. In this system, I am still looking at price action and still looking at momentum, but what I'm doing is I'm concerning myself with these moving averages crossing over. I typically don't want to take any trades. I don't want to take any long trades if the 50 is under the 200. I'm only looking for shorts. If the 50 is above the 200, I'm only looking for longs. That does provide some benefits as well as some limitations. Like all things in trading, there's some kind of balance, but it does provide to be very useful. I do notice that it does provide a higher win ratio. If you look at the system for the same trading day, this was market open right about here. You can see that we were starting to break higher. You can see the same price action rules here, but it never even touched the 200 and then fell out of bed. Broke lower, momentum breaks lower, and then you would have had a swing right there. This would have been the winning trade. Of course, you would have seen it fumble around here. Now, remember earlier I told you that this was a marginal trade, but you could have taken it on the other system. Well, according to this system's rules, you can't take it because even though it's breaking pretty strongly over the 200, which is a bullish sign, it's not so bullish to where the 50 hasn't even crossed yet. So according to this system's rules, you would not take this trade. Then you wait. It's a little bearish. Finally, it does break out strongly here, and then you would have another trade here. Now this is where it gets interesting. Earlier, I was telling you how we had that failed trade that was at fake out at this area. Well, look at what happens here. It falls, finds buyers right around the 200 EMA and also some of this support area. Buyers come in, push the price up. Anyone who went short here because they thought price action was going to say was giving them a short sell signal would have been faked out and would have lost. Now, if you were using the 50 and the 200 EMA as a filter, you would have seen what was happening. You wouldn't have gone short because the 50 had not yet crossed over the 200. A measured move for a strong move down. That's what these moving averages do. They give you measured moves. Strong moves up, strong moves down. So you would have seen it was a move down, but it obviously wasn't strong enough. Even though it looks strong, it wasn't strong enough to make these moving averages cross. So you would not go short. You stay long. It breaks higher. You have another high break in momentum. Boom. You go long again. You go long again for another winner. Now, I do want to point something out. If you zoom in on here, you can see that there was a trade here as well. I call this a dip pop. Many times you will find that under such conditions, these tend to have a probability of being high probability trades. The reason being is this momentum is very weak. These price action traders think that a new downtrend is starting. They get stopped out. These buyers down here buy. Anyway, it makes the price go up. You're anticipating this happening because you know that these moving averages aren't crossing and you're already getting a pullback. It breaks just enough to stop these shorts out, falls down, and then it gives you a buying opportunity to resume with the trend. And you can look at the momentum indicator. The MACD is above the zero line, and if you look at on this indicator, this is an MACD Bollinger Band, an MACD BB. You can see that it was above the center line of the MACD BB. Now the Bollinger Band MACD. Now that's a very bullish sign. So this is what I call a dip pop. Of course, it would have broke out for a traditional retracement swing trade. So that is the trades for today. That I just wanted to kind of go over, how to use price action in your retracement swing trading, and then how You can also use a 200 EMA to filter out potential complex pullbacks. Now this would be right here considered a complex pullback, or also a fake out, because it breaks past the first swing low in an uptrend but does not actually start a full-fledged new trend. If you have any questions, feel free to let me know. Go ahead and post this on my blog. Everybody have a good weekend.